rallying for the right reasons?
For the right reasons, that's debatable, right? I think it's rallying because there's just so much money on the sidelines. This is probably one of the most hated rallies in history. I think there's like $7.6 trillion in money market funds. And look, a lot of people, including my clients, that have a little bit of cash on the sidelines, no one's complaining about earning 5% on cash. But when you're missing out on these 10, 15% returns on some of these large cap names year to date, 10% on the S&P, I think the Nasdaq's up maybe 15% year to date, you're kind of feeling kind of bad about it, right? But I think at the end of the day, it comes down to the thought process between the Federal Reserve cutting rates in September. You're hearing like Neil Kashkari getting a lot dovish recently, that something that kind of wasn't happening before. He was always kind of more hawkish. You're seeing more dovish tone in the Fed. You're seeing earnings reports crush it. You're seeing small caps finally catch up, which is good for the overall market indices. You're seeing the breadth widen, which is awesome.
Yeah, and earlier this morning, U.S. Treasury Secretary Scott Bessent was on Bloomberg, and he thinks that rates should be 1.5 points lower. But with Fed Fund futures calling for rate cuts later this year, what does this mean for investors out there, not just the short term, but long term?